You have Justin Harper, Head of Research at IG Markets, joining us from Singapore with a quick perspective of what he makes of trade right now. Justin, good to have you on the show. Give us a sense of how you're playing the market right now. There's such a bullish sentiment on EMs and Asian markets post the rally that we've seen. How long is it likely to continue?
I think that's an interesting angle, but sadly the market's already factored in the fact that Greece is going to come to a resolution with Troika, and that the problem will be resolved possibly today or by the end of this week there. So we've seen a risk-on attitude definitely forming in the last few days. And I think any sort of sign that this won't happen there, or there might be a derailing, is going to be very bad for the markets there. So this is already factored into the markets there, and any default will have a catastrophic effect on the market, sadly.
What's the view on India then among emerging markets?
There's warming signs that things are picking up there. There's always been this cautionary sort of note there that Greece could, sort of spoil the party there. So as long as this resolution happens this week, the global economy is looking in a much better position there. That will have a spill-out effect for emerging markets there. We saw last year it was a mixed bag for emerging markets there, with certain countries, say Indonesia, doing well, India having a sort of a bad year last year, and this year, emerging markets, some of the laggards are looking to sort of pick up and recover there. We could see India sort of definitely come off the back of that there. We could see the global economy pick up, and with it we hope to see, I suppose, emerging markets that did badly last year recover this year.
What about the expectation coming in on crude, which is once again, looking at $115 per barrel? Do you expect that trend to continue? And also a view on emerging market currencies, which are also seeing an appreciation.
I think emerging markets will struggle with their currencies there, with oil sort of, rising in price there. As the global economy picks up, obviously demand for oil will increase, and so will the price. And obviously it's bought in US dollars, so it's a fact that they're going to have to change this money. We've seen that with the rupee there sort of in the last few days, a weakness there as US dollars have to be sort of exchanged to buy oil. And I think as the global economy picks up, that's sort of the trade-off you get, that the currencies will weaken as oil has to be bought, but obviously that will also improve the sort of economic growth within those countries.
What's the expectation on whether or not we would have a potential quantitative easing, another one really coming in from the US?
Yeah, I think the greenback's going to have some pressure. Obviously, if QE3 comes in there, we're going to see it's going to have some real pressure on it there. And also at the same time, we're seeing the eurozone sentiment improve there, especially after a Greece deal has been struck, hopefully this week. So we'll see the euro dollar very much tested there as the euro sort of rises and the dollar weakens. But then again, if QE3 is not going to happen anytime soon, that will obviously give it some sort of stability and some legs there. But it will face pressure against the euro, as hopefully the euro crisis sort of weakens there, and any thoughts of any sort of default become sort of non-existent.